Hi, my name is Richard Hutton and welcome to the Exponential Fund, the place where you learn to invest and absolutely crush average market returns. This is the Q4 2021 report, and I'll keep it quite brief. So, it seems like my strategy is uncorrelated with the broader market. Actually, it seems to be inversely correlated. So in Q4, while the S&P went up 11%, my strategy went down 11%. Oops. Yes, this is not a sign that there's anything wrong with what I do. It's simply about sector rotation, right? So the companies that I invest in are quite different than those in the large indexes. The companies that I invest in are smaller, some are unprofitable, and they'll get included later on. So what is a bit surprising is just the degree that these companies are on discount. I mean, I had multiple companies that I bought after they crashed 30-40% plus, and then they crashed another 30-40%. Like, Jesus. Now, one insight that I realized is I choose to invest in a stock because it is a high quality company, so large, growing fast. For example, Teladoc, right? And the stock price has recently crashed, so it's on sale. Now, from a trading perspective, because I've studied just short-term speculation for a long time without success, and what I would study from these teachers is, okay, you buy, you have a target where you want it to go, and then you put a stop loss. So you buy because you anticipate an uptrend, but you may be wrong. So if it drops a predetermined amount, then you sell, because obviously you are wrong. It is not an uptrend. So essentially what these people were asking the market to do is a fairly clean move up, right? And I realized that is a limitation. Now, it is possible to make money trading short term. It is hard as shit, And going to the other side, in the investor camp, long term, people would look at the fundamentals and then decide on that. And I found actually a middle ground between these two. I've never heard anyone say this. I put these pieces together. So I choose the company like Teladoc because it is a great company. It's growing fast fundamentally. Then I look at the stock price. Instead, it dropped a lot. I buy. And yes, my target is that the stock will go up to a new all-time high. So my take profit scenario is purely based on the stock price movement. But my scenario in which I cut losses is not based on the stock price. It's based on the fundamentals. I would sell the trade, if the sales started declining over an entire year's period, right? So when the yearly report comes out for 2021, if the sales of 2021 are lower than the previous year, I would sell, right? Regardless of where the stock price is, right? That's the big fucking mindfuck, And why is that? Because the company is so large, way over 10 billion, and growing so fast, like 80% per year, it has a lot of inertia, right? momentum, fundamentally. So I would estimate it is very likely that the sales will continue to grow, at least for another couple of years. I mean, for the next 1 to 2 years, extremely likely, which would give time for the stock to go back up. Right? So actually, the percent of trades that I close with a loss should be very small, right? Yeah, that's a little short rant about how I think. So that's it. See you next time.